Morning, Steve Reed in Chicago with the morning grain comments. Had an interesting trade last night. We started out a little bit higher, broke pretty hard, and now prices are back higher on the trade session. Beans are up about 14 cents, corn anywhere from 7 to 8 cents, and wheat about 10 to 12 cents. The lower trade might have been some follow-through selling from the last few days. We've had a pretty sharp sell-off. We also saw some of the Chinese grain markets lower. The dollar today, though, is sharply lower, which is helping most commodity prices. That may have helped prices come back a little bit. As far as the weather forecast is concerned, there's going to be rain around the Midwest. Today's maps show the best rains again in the northern and eastern areas where we've seen it over the last few weeks, but maybe we won't get as much rain in the heart of the Midwest where it's the driest as maybe we thought the last couple of days. We also see kind of the ridge coming in and back out next week, which will make for a mostly drier than normal forecast, but temperatures won't be as hot as they have been. We continue to see reports on this crop tour that's moving from east to west across the Midwest. In Indiana, the few counties that they stopped in, they had an average corn yield of only 56 bushels per acre versus last year's trip yield of 143. In central Illinois, one of the higher yielding parts of the country for corn, they had an average yield of 109 versus last year's yield of 158. Those yields are extremely low. We also saw an economist that came out and he estimated the corn yield at 130, which would give him a carryout of 320 million bushels for corn this year versus the government's 1183. He put a couple of scenarios together with a 125 yield and a 120 yield, and both would result in a negative carryout, suggesting prices would need to rally if yields drop that much to slow demand. On the beans, he's guessing the yield right now at 39. But he has a carryout for next year in U.S. beans of only 11 million bushels. You know, that we can't attain that. So again, if that's correct, prices would also have to rebound and go higher to slow demand. So anyway, we're starting out a little bit better. The market has to decide, as the sell-off the last couple of days, is that enough to correct maybe an overbought situation? Is the weather going to be less than what we need to keep crops from deteriorating more? And is the outside markets finally stabilizing? As always, these are my thoughts and not those of ADM Investor Services or ADM, and I wish you a safe and profitable trading day.